Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8557 mark, and here on TradingView the market is up by 1.39%. and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, and also the key areas of support and resistances. And I'll kickstart the video by giving a brief of what has been happening here on the Polygon Matic chart. From the all-time high, we had been seeing no prices in this massive ABC corrective movement, which took us back to around the $0.32 mark, and after doing so, I believe it has done the minimum that we expected it to do in its ABC corrective movement, and soon we are going to see this bounce to the upper side, obeying this Elliot wave structure, having a wave 5 taking us back to an all-time high in the next bull market. But before that plays out, we have seen the formation of this first wave to the upper side, and having seen the formation of that higher Elliot wave count 1, whatever we expect next is a movement to the lower side in the formation of this higher Elliot wave count 2. And in this video I want to give you the minimum target areas to the lower side in the formation of this higher Elliot wave count 2. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this Elliot wave structure in yellow, which is a fractal wave within that first wave to the upper side, and that is so because a first wave to the upper side is an impulsive wave, and we expect to see fractal waves in formation, where the wave 5 of this Elliot wave structure in yellow was completing the formation of that higher Elliot wave count 1 to the upper side, and that higher Elliot wave count 1 made its high at around the $1.3 mark. And using the trend based Fibonacci, we can get to see whether that first wave to the upper side has done the minimum that we expect a first wave to the upper side to do, by connecting the Fibonacci's from the low of the first wave down there to the high of the wave 1, then dragging the fibs to the high of that wave 3, and that gives me a minimum target area to the upper side in the formation of that higher Elliot wave count 1 at the fib level 0.618, and that is at around the $1.2475 mark, which is a target area that we have fully maximized here on the Polygon Matic chart. And having seen that high, whatever we expect next is a retracement to the lower side in the formation of this higher Elliot wave count 2, and using the Fibonacci's we can sketch out a minimum target area to the lower side in the formation of that higher Elliot wave count 2 by connecting the Fibonacci's from the low of the first wave down there to the high of that wave 1, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which perfectly lies between the $0.8 mark and the $0.69 mark. And you can see we had retraced back to the fib level 0.5, then saw a very nice reaction to the upper side, making another peak at around the $1.17 mark. And because a wave 2 is a corrective wave, we also expect to see an ABC corrective structure, and I believe we are seeing such a structure right here, having this as the wave A, making its low at around the $0.77 mark, then a wave B making a high at around the $1.17 mark, then the wave C low is not yet in, and that is what I'm expecting to see soon here on the Polygon Matic chart. And that gives me the key scenarios that I expect to play out here on the Polygon Matic chart. You can see we had retraced back to the fib level, that is the area at around the $0.78 mark, which is a key area of support, gave us support, and we are seeing a very nice bounce to the upper side over here, and there are chances that we might see a retest of this key area of support. And in case the retest is in and the retest is a success, there are chances that we might continue pushing a little bit higher and get back to around the $0.95 mark, which is a key area of resistance. And at that key area of resistance, we can either manage to break above it, or we can get rejected and see another pullback to the lower side and lose that key area of support at around the $0.78 mark. And in that movement, in case we see a retest over here and then see a nice bounce to the upper side, we might also be completing the formation of another chart pattern, which is right here, which is a double bottom. Having that as the first bottom, then we have seen the formation of the neckline. Then in case the retest is in, we can see the formation of the second bottom, then expect a very nice bounce to the upper side. And in that movement to the upper side, we'll be seeing the breakout out of this chart pattern, which is a chart pattern that normally breaks to the upper side, having the target area of the breakout as the height between the neckline and the bottoms. So using a trend line, we can get that height and then place it above the neckline, giving me a minimum target area back to around the $1 mark. So there are chances that we might get back to around the $1 mark in case we manage to break above the key area of resistance at around the $0.95 mark once more. But my primary scenario still remains that we have not seen the low for this higher Elliot wave count 2, and that should happen in between the $0.81 mark and the $0.69 mark. And there are also chances that in case we lose the $0.69 mark, we can make a new low at around the $0.32 mark, and that I'm basing it on the trend based Fibonacci, connecting it from the high of that wave A to the low of the wave A, then dragging the fibs to the high of that wave B. That gives me a minimum target area in case we lose the fib level 0.618 back to the fib level 1.618 at around the $0.32 mark. So we also need to have that in mind here on the Polygon Matic chart. Also jumping to the 1 hour chart to see what we have information here on the 1 hour chart. Within the formation of this wave C, that is within this corrective structure, within the wave C, we are seeing that is an Elliot wave structure information, having these as the wave 1, then a wave 2, then a wave 3, then this retracement over here might be what is forming a wave 4 before we expect another impulsive movement to the lower side in the formation of a wave 5 to complete the formation of that higher Elliot wave count 1. And if we use the Fibonacci's once more, that is the trend based Fibonacci, we can sketch out a minimum target area to the lower side, assuming that the high for this wave 4 is in, and I just need to connect the Fibonacci's from the high of that wave 1 to the low of the wave 1, then dragging the fibs to the high of the wave 3, and that gives me a minimum target area to the lower side in the formation of a wave 5 at the fib level 0.618, and that is at around the $0.57 mark. And that means there are high chances that this target area that I have right here might not be the perfect target area in the formation of this higher Elliot wave count 2, and we might see even lower prices below the $0.69 mark and maybe get back to around the $0.57 mark. So let's be prepared for that here on the Polygon Matic chart. Also taking a look at the indicators to see what movements will be supported here on the RSI. We are trading at around the 63 mark, meaning we have a bit of room for us to support any movements to the upper side before we get into the overbought region. Also getting a look at the MACD. Here on the MACD, we have printed a bullish cross, and that would mean higher prices are coming our way, but we have started to see a decrease in volume, that is the buying volume here on the MACD, and that would mean soon we might be able to print a bearish cross. So let's be patient and see how that plays out, and I'll keep you updated.